So what you see here is this. For every $1 I'm prepared to risk, I have a potential to make more than $6. In a boxing game, you will have two fighters, and the only way that one of them will come out victorious is to defeat the other. At some point, when we feel or sense that one of them is going to win the game, we put in side bets. Now, I understand it as demand supply. If there are more people wanting to buy, that represents demand, and the job of a buyer is to push price higher. The job of the seller is to oppose the buyer and to press prices down. So this is a constant influx of two major forces in the marketplace, the buyer and the seller. Out of this spot betting comes a concept called CFD, contract for difference. Idea of trying to make money from financial markets. You got to have answer for the four basic questions. Number one. Now this question refers in simple terms, do you buy or do you sell? The most important question, because if you do not know where the market is heading, you cannot come to a decision as to whether to buy or to sell. Obviously, if the price want to go up, you want to buy. Likewise, if the market is coming down, you want to sell. And you can do that in financial markets. The next question you want answer to, knowing the trend is important. For example, the trend says dominant trend is up, I want to buy. But you cannot buy at any price. You got to buy at a price that makes sense to you. I've seen many traders, including myself when I was a lot younger. Price move, I chased without knowing whether the market has momentum. Is that you end up buying the high, selling the low. Next question you need to answer. There is no trading strategy in the world that guarantees you perfect score 100%. There will be time, despite your best effort, price don't move the way you think it's going to move. So the question here is, at what price that the market move against you, you decided that you're wrong? Now the idea is not to fight the market. The idea is to make sure you protect your trading account. Because remember, we are all trading financial markets with a margin. Meaning to say that the amount of money you put in for the position is only a small fraction of the total nominal value. When you are wrong, the losses will amplify. Likewise, if you are right, the profit will also amplify. That's one reason why people are so excited about trading. Now the fourth and last question. The whole idea of trading is to make money. That must be the only objective. There are times in which you take a position and the market moves in your favor. It's easier said than done. You need to have a target. When you take up a position, you got to know before the market even moves where to take profit. Now there are times after you've taken a profit, market continue to move in that same direction and say, only I stay in a little bit longer. There is no such thing. Take what the market can give and then you wait for another trade. You'll notice that the price is over here. If the price goes down to 94.49, the price may shift a little bit, okay? Remember, in the monthly time frame, the upper end of the bracket in which to buy is 94.5. The lowest price is 96, not very far away. 4 hours time frame, the dominant trend is pink, meaning to say short-term prices want to come down. In the most recent price movement here, you see that there's a counter trend already developing. I expand it. So this is the first box of a move upwards. So when I see this, I know there is opportunity to buy. I want the price to come down into a place whereby my risk relative to my potential reward makes sense. At 50%, it doesn't make sense to me. But the second box where we are right now, as of 1 hour ago, you can see the prices are coming down. The most recent high this week is 97.065. As prices are pulling back, you will notice that this bracket of prices is where I want to enter the market. Because when I buy, I am trading with a trend based on the monthly, weekly, daily. Is it possible that I will be able to make money? I don't know. But all I know is that if I'm wrong, I need to get out at this price, at the point of invalidation. And if I'm right, I need to take profit way above. Okay? So prices in the 1 hour time frame, the bigger box is pink. It means coming down, but there is a counter trend already in place. Prices are now drifting lower. It's getting very close to my 1 hour bracket. Okay? If I can buy within this area, 96.285 to 96.45, and then followed by what happens inside this bracket of prices, what I'm looking for is a reversal signal in a 1 hour time frame. If it happens, I will pull the trigger. Now, if I'm not in front of my computer, can I not put a limit order? 96.45, I want to buy. I will put my stop just under this point here, 96.275. Why do I not put it exactly at the price at 96.285? Because there are times when the market overshoot. Now in the marketplace, there's this thing called fake move. The market move one way, and then the market actually want to go the other way. This is a price everybody can see. If I am buying, I want to put my stop just here. Allow the market to breathe a little bit. For example, I just put it 10 points, 0.10 point, okay, below the point of invalidation. Here is 96.285. I put my stop here. 0.175 is my maximum risk. But if I'm right, if I buy within this bracket, can I put a limit order at 96.45? If I do, prices can either go down below this price or it bounce. And if it bounce, I want to take profit here, 97.545. So what you see here is this. For every $1 I'm prepared to risk, I have a potential to make more than $6. So this is the kind of risk reward that you want every time. These are superior risk reward ratio. Meaning to say, I don't need to be right all the time. Out of 10 trades, if I get 3 to 4 trades right, and maybe 5 to 6 trades that are wrong, I will still end up making money. I've been trading for 40 years. It works for me. Hopefully it can also work for you. I'm Daniel Wang. This is the way I trade, and I'm more than happy to give it to you.